Alright, YouTube, it's your main man here, Smart Money Rich. So today, guys, I'll be doing a trade breakdown on GBPUSD. I took this trade on Friday. The signal was also sent to the free Telegram community that I took the trade with all of my community. Now, this trade that I took on GBPUSD was able to give me a 5% on my account. And I traded my PropFirm account and passed phase 2 with this single trade. So today I'll be doing a breakdown, step-by-step process on how I took this trade and how I was able to pass my PropFirm account on this single trade. So stay tuned, guys, as you learn from this setup. So alright, guys, here we are on the screen. So this was the trade that I took on Friday that helped me pass my PropFirm account phase 2. So now this was a 1 to 5 trade with a 17 pip stop loss and a target of 85 pip take profit. Now let's see how we came about with this whole setup, right? So right now I'm going to move on to the higher time frame because I did the analysis from the 4-hour time frame. I'm going to do a replay so you guys can follow up. Okay, so now we were around London section. Did this analysis around 10 a.m., 10:30. It was around here that I did this analysis. Yeah. So when I saw this opportunity up here, the trade was around this area here. Then there's zone. I marked out this zone. The reason why I marked out this zone is simply because, first of all, I have to look at the swing points, my swing points, okay, guys? So here I marked out my swing lows right here, and then I marked out my swing highs up here, right? So one thing I love to trade the swing structure and not the substructure, and that's what I teach. Okay, what was the reason why I marked out this zone? I marked out this zone because I've seen that this zone has reacted several times as a valid demand zone, right? So what you can see right now is that the first time price moved away from this level here, it created liquidities, right? Which is this equal highs up here. Okay, guys, so these are things you need to look out for when you're trading. You need to look out for liquidities. Now, this was a liquidity sitting above that high, right? There was a liquidity sitting above that high that I spotted, because if you're unable to spot liquidity, you will become the liquidity. Now, I found out that price reacted out of this zone nicely and left an imbalance. This is an open imbalance. Okay, which means price will always come back to fill the imbalance. Price came back to fill this imbalance and left again. When price pulled up to this level, it did not break the highs. Rather, it created more liquidity, giving us 3 touches. Now, once price gives us 3 touches, a lot of traders are going to look at this area as a valid resistance, right? Because we say resistance 1, resistance 2, and now resistance 3. Now, a lot of guys want to sell from this level, but this is simply the market building liquidity that is manipulating traders. Now, I saw that price have already reacted from this level. After taking out the imbalance, it pulled up, came back again and pulled up. Now, looking at price, how do you identify a strong low compared to a weak high? Now, what price was doing here is price was giving us that higher high, a higher lows stops. All right, you see we have this low is higher than this low, and the third low is higher than the previous low. Now we saw this impulse to the upside that gave us a new low that ended up breaking the previous highs and taking out all the liquidities that were sitting above this high. Now when price impulsed to the upside to give us this high here, price left a valid level of imbalance here that price later come back to fill, right? When price filled that area, we saw an impulse to the upside. When price impulsed to the upside, this was the last zone that gave us that strong impulse. And now price left a valid imbalance. Looking at this price here, you'll see that price left a valid imbalance. This is an open imbalance. One thing you need to do for yourself as a trader is always make sure that you are able to spot areas of imbalances on your chart, as imbalances act as magnet to price, and also be able to spot areas of liquidities in the market. Now, one thing I do during my time of learning, I learned out that this red box here is my Asian section. So this was the Asia high, and then this was the Asia low. Now, during London open here, London took out the Asian lows, right? London took out the Asian lows and also did what? Took out the Asian high. Now, whenever price reacts in this kind of manner, price left an open imbalance. Now, the liquidity below here, below this London section, I was able to spot this liquidity sitting above my demand zone, right? So now, since I was able to spot the liquidity sitting above this demand zone, and then there was an imbalance, there was an open imbalance here that has not been filled, guys. Due to this imbalance and that liquidity that is sitting above my demand zone, what I know that price will do is that price is going to pull down, take out the London low, mitigate this demand zone, and pull up to take out the London high. And now there was an imbalance sitting below the small zone up here. That was why I looked to take my profit at this high. Because remember, this was the London high, which equals liquidity. This was the previous New York high, which equals liquidity. This was the previous London high, which equals liquidity. So we are having three liquidity to the upside and then an open imbalance that needs to be filled, right? So with all these confluences, I already know that this trade is going to play out successfully using the concept of liquidity, imbalances, and what? Order block. This demand zone right here was my valid order block. Why is it a valid order block? How did I know that price will not break below this low, right? Because you can see my stop loss was sitting right below the lows. Now I came to understand that price has already grabbed all the liquidities that were sitting below these lows. Look at, we have a London, a New York low, and a London low. Now when price impulsed to the downside, price took out all the liquidities that were simply sitting below this low before it created this order block that gave us that impulse to the upside. Now my expectation on this trade was for price to pull all the way down, take out this London low, tapped into my order block, which is my demand zone, and pull up all the way to the upside. The reason why price should pull up to the upside is to take out the London liquidity, New York, London liquidity, fill the imbalance, and then pull up to the upside. So now guys, let's play price and see how this price played out. This was how I was able to pass my account on Friday. This was exactly the trade I took, and this was exactly the reasons why I took this trade. Now, this trade that I took right here, I did this analysis in class while I was taking the master student at Happy Forex Academy. I was teaching them, right? Anytime I teach my master class student, anytime I teach my students, I'm always doing a live analysis with them, and we all took the trade. Yeah, we all took this setup. I did the analysis in front of them, I gave them reasons why I'm looking out for buys. I gave them reasons why my stop loss is below the lows. I gave them reasons why my take profit is at that structural high. And I also told them exactly how I expected price to move, right? So let's play price and see how price played out. So price started moving, right? You can see we are still in the London section. This is where the New York opened, yeah? You see, imbalance has been grabbed, right? The imbalance has been filled and the price just continued to pull to the upside, taking out this liquidity. You guys can see the liquidity below here has been taken out. The liquidity above here has also been taken out. So this is my very first trade breakdown on YouTube. I've always been having a whole lot of wins, guys, but I've not been doing trade breakdown here on YouTube due to time scheduling and all of that. But right now, I promise you guys, you all know that I'm big on educating, right? I'm always high on educating people how to trade, how to put everything. In fact, I'm big on education, guys. So if you love this content and you want to see so many trade breakdown from me, how I get my wins, how I take my losses, how I manage my trades, how I manage my positions, and how I apply proper risk management in all my trade setup, make sure that you subscribe to this channel, subscribe to this YouTube channel, turn on the notification bell so that you always get more videos notification whenever I drop videos like this. And if you love this content, guys, click the like button, drop a comment, whatever you want me to do, drop it in the comment section and I will do that for you guys. Thank you very much for watching this trade breakdown. I'll see you guys some other time. Good luck, guys.